Servitor, please mute yourself. Now, what is cash flow? In line with IAS 7, which standard talks about cash flow? IAS 7. Here, we are going to be dealing with cash movements only. This is not a accurate basis of account. It's cash basis of account. What do we mean? We are only talking about cash. IAS 7. It is all about inflow and outflow. If anybody asks you to define cash flow and outflow of cash, this is what we are going to be doing. Don't forget, this is not a pura basis of reports. It's about cash movements. Does the cash come in or does it go out? Now, I want you to listen to me very well as I give you the background information needed for the cash flow. Now, if I'm asked what is cash flow, my definition must be able to capture these two words, inflow and outflow. So I can simply define cash flow as how a company or individual generates cash. They were not referring to what company, not individual now. How a company generates cash. Generate is a form of inflow, and how it is being utilized. That means how it is being spent. So, utilize outflow. If I'm to ask to define cash flow at any given point in time, those two words, how a company generates cash and how it utilizes the cash. Now, if somebody now asks me further, what is statement of cash flow? You have asked me for the cash flow, definition of cash flow, which I have stated. If you now ask me, what is the definition or statement of cash flow? I will also put definition. I will also put statement to my previous definition. I will say it's a statement showing how cash is being generated and utilized. What would differentiate to me is the statement. I will also put statement to my definition. If you now ask me, what is statement? I will now say you to go to police station where they will give you a lot of statements. So let's move further. What are the methods of preparing cash flow? Method now of preparing cash flow. We have direct method and we have indirect method, which is the most popular. We have direct and indirect method. For direct method, what does it really mean? When you are preparing cash flow from the source document, when you prepared your cash flow statement from source documents, that is it. What are the source documents? We have the ledgers, we have the cash book, and code, credit sales, all those things possess journal, all those things are what? From the source documents. Now, direct method can be tested in exam in two ways, which I'm going to show you. Two ways, direct method. It could be from the cash book. They'll give us the cash book. Or they want us to adjust adjustments of existing financial statements to get it. Now, let's go for that. For indirect method, what is indirect method? It simply means preparing cash flow from the existing financial statements, such as just as POL, statement of financial position, statement of change in equity, then notes to the account. These are the things. Now, but what is the difference between the two? Because either I'm preparing direct method, either I'm using direct, or I'm using indirect. There must be three components. Components of cash flow. If they don't say component, they will say source or heading. The components of cash flow are what? One, operating activities. Two, investing activities. And three, financing activities. These are the three components. But either I'm using direct method or indirect method. These three components must be there. Either I'm using direct or indirect method, these three components must be there. What is now the difference between direct and indirect method? Based on calculation, the difference between direct and indirect method is treatment of operating. Treatment of operating activities. But look at this, it's for calculation. Based on calculation, treatment of operating activities. The way we go about operating in direct method is different from the way we go about it in indirect, in calculation. But in short, look at it. All the questions they can ask you on cash flow, I have summarized it for you. All the questions they can ask you, I have summarized it. This is it. The importance of cash flow. The one I'm talking about, the difference between direct and indirect method, operating activities, financing, information needed to prepare cash flow. This is what I'm talking about. Difference between direct and indirect method. Although the difference between direct and indirect is the treatment of operating, but the difference can be summarized as follows. For indirect method, we use income, net income as a basis, and add non-cash expenses. While direct method, we only use the cash transaction, that is cash spent and cash received, because it's on the source document. Then, based on popularity, based on accuracy, based on time taking, based on popularity, indirect method is more predominant, is more used than the direct method. Based on time taking, oh, indirect takes less amount of time, while direct time is time consuming. Based on accuracy, direct method is more accurate. Based on preparation, factor taking in preparing it, all those things I've highlighted it for you to know. So let's go back. So now that I've understood the difference between direct and indirect method, now let's take the components one after the other. Don't forget we have three components. The first one is operating. Let's go to operating. Operating activities. This is the first one. Out of the components, what is operating? What do you need to know about operating? Very simple. In exam, if I ask, in ICANN exam, if you are asked about a particular question and you don't know it, join the English with English to say something. Operating activity. Operating is about operation. Activities, what we do. I can join the two together. But according to IAS 7, it says is the key. Is the key. Key. And the principal activities of an entity. Oh, is the key and the principal revenue generating? Is the key and the principal revenue? Sorry, revenue is the key and the principal revenue generating activities of an entity where money is coming out. This is the definition given by IAS 7. Say is the key and the principal revenue generating activities of the organization, where the money is coming from. So what are the items? Just like network, what is the network doing to get the money? What are source of revenue? They are providing lecturing services to ICANN students. So one, what is the items under operate activities? Cash received from customer is operating. So cash paid to suppliers operating. Cash paid to government in form of in form of tax operates for cash paid to staff to staffs and employees in form of wages and salaries operating. Commission received. When I receive commission, receipts. 6, cash received from service render and cash paid for service received. All these are operating activities in case you ask. Don't forget. Next, what is investing? Which is the starting point of any cash flow? Investing activities. Investing activities is two things: acquisition and disposal of non-current assets and investments. That is it. Is the acquisition and disposal of non-current assets and investments. What is acquisition? Acquisition is English. Buy. What is disposal? Sell. So investing activities is acquisition and disposal of non-current assets. Now, let me ask the class question. If I'm doing a question and they report under the non-current assets, they report PPE and intangible assets. If I ask you, how many activities will it be in university? How many number of activities will it be in university? If I ask you, how many activities will it be in university? Who can tell me how many activities? How many activities? Hello? Who can tell me? Abiodun said 2. Another one? Don't forget the definition. Mr. Victor said 1. Mr. Victor said 1. Interesting. Yes. Any other one? There are many, sir. How can it be many? What do you mean by there are many? There are not many. How many activities? That means you do not follow the definition. If you follow the definition, you will get it. Don't forget the definition says, the definition has made it clear. It said acquisition and disposal. For PPE, I can buy, I can sell, buy and sell. For intangible, I can buy, I can sell. One, two, three. When they give you question on cash flow, you are no longer seeing question again. You are to see answer because it's the simplest. When I was writing the exam, I used to pray for cash flow, and they brought it during my time. And cash flow have not been tested in the last 2 diets. So for tendency for it to come this diet is very hard. Don't forget, let me proceed further. No current assets can be subdivided into two: tangible and intangible. For the tangible, we depreciate. For the intangible, we amortize. My brothers and sisters, all items, please take note, all items reported under non-current assets are investing activities. Anything reported under non-current assets, don't forget, they are all investing activities. Everything reported under non-current assets, they are all investing activities. If they ask me to say how many transactions will be, I'll just look what is there. Now, look at it. If they ask me what are the items under investing activities, I will say acquisition of non-current assets, disposal of non-current assets, acquisition of investment, disposal of investment, plus the linkages. Plus the linkages. What are the linkages? What are the linkages? The linkages are: one, dividends received. For me to receive dividend, I must have invested. Don't forget, dividend received is an investing activity. For me to receive dividend, I will have invested. For me to receive dividend, I will have invested. So dividend received is an investing activity. What do we call leakages? What we can trace. Your mommy, sister, it can be traced to your family the same way. Two, interest received. Interest is what? Investing activities. For me to receive interest, I must give somebody loan investment. Which loan are we talking about? Loan in the not current assets, not loan in the current asset. That one is cash and cash equivalents. We are still coming there. Three, finance income. Then investment income. These are the linkages to what? Investing activities. Those are the linkages to investing activities. Now, let's go to finance. As the name indicates, financing activities. As the name indicates, financing activities. How do I finance my activities? That is what it's saying. Financing activities. How do I finance my activities? If I ask you as a man, how do you finance your ICANN program? You will tell me that you will work from your salary, you meet your obligation. As a woman or ladies, even as a married woman, if I ask you, how do you finance your ICANN program? You will tell me, say you work also. You finance it from the work and other income. Apart from the work, other incomes. Because man is also other income to a lady. So that is it. The same way here, IAS 7 is not asking us how does complete finance services. According to IAS 7, it said is the change in the size and composition of liquidity. Say it is changing in size and composition of liquidity. My brother, this is just grammar given by IAS 7. This is the definition given by IAS 7. It's just a pure grammar. How does a company finance its activities? Financing activities is just 6 items. 3 are made, while remaining 3 are linkages. First, how does a company finance share capital? They will issue shares to the public. They will issue shares to the public. 2, the share can be issued at a premium. 3, they also borrowing. Which borrowing are we talking? Non current liability. Borrowing that take more than years to repay. Then 4, they pay dividend to shareholder. Dividend paid to shareholder. Then finance costs. 5, finance costs or interest payable. Those who borrow us money must collect interest. The last one, lease payments. These are the 6 items under financing activities. But in exam, if they ask me what are the items under financing, I cannot say share capital, share premium, borrowing. They will not mark it for me. They will not get. But I will use English to modify it. One, I can say dividend paid to shareholders of the company. Correct. Interest paid on borrowing. Correct. You are right. Redemption of borrowing. Correct. Issue of borrowing to the public. Correct. Interest paid on lease assets. Correct. We will just use English to modify all this. Now, having said that, which information do I need to prepare cash flow? You are not getting there. Information needed to prepare cash flow. Let me see where I this. Information needed to prepare cash flow. And I want this page to be honest. Which information do I need to prepare cash flow? Look at it. For me to prepare cash flow in exam, examiner can ask me in two ways. The conventional manner, the conventional approach, and non-conventional. Approach. But this cannot be tested to you. But I'll show you a question on how to go about it. Then in a conventional manner, how can they ask me? One, they must give me information needed to prepare cash flow. One, they must give me statement of profit or loss. Current year. For me to prepare cash flow of 2020, you must give me statement of profit or loss of 2020. If you give me 2019, I do not need you. Please be with me, my brothers and sisters. They must give me statement of cash flow of 2020. Now, two, which information do I need again? Two, you must give me statement of financial position, 2 years. If you want me to prepare 2020, you must also supply me 2019. That is certain in a conventional manner. Then three, I need additional information, which is the notes to the account. Don't forget, additional information has information. Which information am I expecting additional information? One, information regarding non-cash non-cash items, such as depreciation, amortization, then goodwill, whether it has impaired or it has been written off. That is it. That is it. Secondly, which information am I expecting additional information? Two, 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 which information am I expecting additional information? Information on disposal. What can they dispose? They can dispose PPE, investments, and intangible. The next, third one, which information am I expecting additional information again? Dividend paid, which is mine. If I decide to give me or not. Then four, which information am I expecting additional information? Information regarding information regarding dividend received, tax received, finance income, business income. If all this information are not part of the POL, they will be seen in additional information. On that note, that is the background information regarding IAS 7. We are now going to put what we have listened to into practice. Then we start applying question. We will start with indirect method first. Question. Any question for me before we proceed? You are the one going to do this one. You will tell me which activities, where it is operating, investing or finance. Then, but before we go to this question, let me quickly differentiate between these two concepts: dividend paid, dividend received. Interest paid, interest received. For dividend paid, which activities is financing? There is an inflow. It's an outflow. We are paying. The dividend received is an investing activity. It's an investing activities, which is inflow. Interest paid. Pay interest on the loan. Financing activities. Outflow. Interest received. Investing activities. Inflow. Now, this is what I want you to do for me. Let's not show you now. You will tell me which activities, then whether it is inflow or outflow. You will tell me which activities, whether it is inflow. Leave one. Cash or cash equivalent as at the beginning of the year. Leave that. Before you do that, before we solve this problem together, just calm down for 2 minutes. In the next 2 minutes, let's our brain and answer the question. Just look at what we have taught, recap on it, because it's the basis for answering this question. In the next 2 minutes, we will start. Now, let us start. Yeah, second one. You will tell me which activities and whether it is inflow or outflow. Cash received from customer. Which activities? Cash received from customer. So you can say financing. Muiba says operating. Which are we going to believe? Who will settle the matter? When about Abdullah said his inflow operating flow. We have about 5 years. Everybody must contribute. You cannot sit on the fence. Next, the answer is operating. We said, what is operating activities? These are the key and the principal activities of organization. Is the key and the principal activities of organization. Say is the key and the principal activities of organization. Next question. Cash paid to suppliers and employees. Cash paid to suppliers and employees. Cash paid to suppliers and employees. 2 people have answered. 4 people, good. Operating outflow. You are correct. Yes. Cash paid to suppliers. If you don't pay our suppliers, if we don't pay our suppliers, they will not supply us. It's key to the business. It's key to the business. So cash paid to suppliers and employees, cash paid to suppliers and employees are what operating activity and their outflow, correct. Cash generated from operating activities. Let me see who will take otherwise. What is the answer to this one? Let's see. Hey, Mr. Victor, there's a cash generated from operating. You should go and take cash generated from operating activities. They've said cash generated. So an operating activity, so and it is operating activities and it's what? Inflow. Yes, interest paid. Interest paid is which activities? Interest paid. Interest paid is okay. We're now in interest paid. Interest paid is which activities? You will tell me the activities. Interest paid. Mr. Beldu say investing, but he does not say which activities, whether it is inflow or outflow. Mr. Victor said it's financing. Investing outflow. Abelu just said it is outflow, no. Interest pay, we said financing assist item, share capital, share premium, dividend pay, finance cost, interest paid. Who do we pay interest to? Those who give us loan, borrowing. Is financing activities is an outflow. If you don't know all those background, in short, if you can understand the background, no question will come your way. You easily get it. They cannot deceive you. If you understand the background information of what I've been saying this morning, is the key to answer all the question cash flow. When we are talking about investing, acquisition and disposal of non-current assets, operating, what is key to the business, financing 6 items. If you can get those things very well, you are good to go. Income tax paid. Which activities is income tax? Don't forget, you must tell me the activities and the operating outflow. Ms. Sashoika and Abiodun, they go with operating outflow. Any other question? Any other answer? Without wasting most of your time. Yes, you are right. Tax is operating. Sure, it's one of the items on our operating activities. Cash paid to government in form of tax is an operating. I say an operating is key to the business. If we don't pay government their tax, they will lock our shop. That is it. Interest received. Interest received with which activities? And tell me whether it is inflow or outflow. The people have, let's see. Hey, somebody failed it too. Interest received. Before I can receive interest, I must have invest. It's a linkages to investing activities. So invest, you see, is an investing activities and it's an inflow, not financing. The interest paid is financing, which is an outflow. Dividend received. Dividend received. Dividend received is which activities? Dividend received. Correct. Dividend received is an investing inflow. If I can receive dividends, I must have invested. Next, proceed for sales of property, plant, and equipment. Proceed for the sales of PPE. Correct. It's an investing inflow. Next, I'm coming. Disposal of discontinued operation. No, proceed from sales of investments. Proceed from sales of investments. Which activities? It is investing inflow. Now, look at all those items. Look at it. Which one is not clear to you? Not to waste your time. But let's want us to finish it. Okay. Look at it. Which one is not clear? Let's go to question. Proper question. Go through it. The same you have identified. In the same way, when I give you a question, you must identify everything. Let me show you a question. Let's start with this one. AG Limited. Is the effect no movement? The effect of changing is the effect no issue until it is when it is used it to another thing. Any other question? Okay. Let's start from beginning. Non-current assets. We have VP and development expenditure. VP and development expenditure. Which activities do you think they are going to be? The same way you have identified it. When they give you question, it's the same thing. Please. Non-current PPE, which activities? Don't forget anything. The right under non-current assets is investing activities. So investing activities. I don't know whether it is simple or actually. So let's start with the solution. We are going to start with indirect method. I will now give you the template to follow, which will make life easier. Before then, let me complete this. Let me clean my face. Join a minute. I will not give you the formula. We are listening to me very well. It's very simple. Let's start the question. We are starting with indirect. Don't forget. Let me share my board. I hope you have your question with you. AG Limited. Good. Hope you can see my board. Hope you can see my board. I will say, good, my brother. Next thing, AG Limited. I will say statements of cash flow for the year ended 31st of March 2005. 31st of March 2005. This is what I'll do. Operating activities. Don't forget, we are using indirect method. I'll go and pick what is the profit. Profit before tax. Somebody should supply me profit before tax. Mute yourself, let's be talking.
255.
255. 255. I will now go to the templates. Let me show you the template for operating. For the templates, let's have it. Templates for operating activities. I will say, okay, 1, add back non-cash items. That is the first thing, add back. Don't forget, what are the non-cash items? We have depreciation, we have amortization, we have goodwill, impaired or written off. Where am I going to see non-cash item? Additional information. How many non-cash items am I expecting in this question? I will go to the non-current assets. In the non-current assets, the reported PPE and development expenditure. So for PPE, we charge depreciation. For development expenditure, we amortize. Where am I going to see information regarding non-cash items? Additional information. We are go to additional information. What does it say? We need depreciation and amortization. Yeah. Where am I going to see those two? No current asset has told me that I need PPE for depreciation, amortization for the intangible. I need them. Where am I going to see them? Additional information. Let's go there. Yeah. Somebody should talk to me.
Roman figure 6.
What does it say?
Depreciation charge.
What does it say? Roman figure 6?
Depreciation charged for the year was 720,000.
I'll just put straight, add back. That is it. 1. Add back non-cash items. Where am I going to see information on non-cash items? But this is not the non-cash items, because what they report in non-current assets will give me the clue of non-cash item I want. Yes, yes, yes. Where am I
Roman
going to?
figure
Roman figure.
5.
What did you say?
Cost of sales includes 80,000 for development expenditure amortized during the year.
Any question on indirect method? You go. This is the starting point. After you have written your heading and the topic, just go to the non-current assets. What do you report? You reported two things: intangible assets and and PPE. For PPE, I will charge depreciation. The other one I will amortize. For he has given me, where am I going to see information on depreciation and amortization? Additional information. We just go. Amortization of it. I'll go to the template after I finish that one. What is the next thing on the template? Let me show you. In exam is the template we are going to follow. We just say, okay, two, information on disposal. If it is profit, I will less. If it is loss, we add. That is it. Where am I going to see information on disposal? Additional information. Somebody should look
Roman,
for additional information and report.
Roman figure 4.
What do they say?
Non-current tangible asset disposed of in the year had net book value of 75,000. Cash received on disposal was 98,000. Any gain
Good.
or loss disposal has been included under cost of sales.
Good. We just say, okay. What is the carry amount against the selling price? The selling price against the carry amount. How much is the selling price? How much is the selling price? The selling price is 98. Carry amount is 75. He has made a profit. Profit. Don't forget if it is profit, I will less. Just consider profit on disposal of PPE. That is it. Profit on disposal of PPE or less. Next, on the template, this is what we will be following in any exam. What is the template? One, add back non-cash items, information on disposal. If it is profit, I will less. If it is loss, I will add. The next thing on the template, wrong classification. Let's go there. Anytime they give me question on cash flow, 3. Wrong classification. Opposites of the question. Now, what do we mean by wrong classification? Which activities, either they remove or add, is not supposed to be part of operating that we have removed or add. That is what it's telling you. Let's go to the question now. That's why you must know the activities. If we go to the question, we have a revenue. Revenue is which activities? Revenue is which activities? Revenue is operating activities, no issue. The cost of sales is which activities? Cost of sales is operating activities. Distribution cost, operating. Administrative expenses, operating. Finance cost is not operating activities. Can you see? Finance cost. Don't forget, opposite of the question. Opposite of the question. What did they do in the question? Finance cost. What do they do in the question? They subtract. What am I going to do? I will add. Talk to me, any issue, before I proceed to the next one. Any issue. Talk to me before I proceed to the next one. Talk to me, any issue?
No, sir.
Good. The next on the template is the template you are going to follow. The next on the template is change in working capital. Say for change in working capital. Don't forget my working capital, current assets, and current liabilities. I will interpret my working capital We'll go there by saying, okay, change. Stop. Working capital. Inventory. What is inventory at the beginning? I will look at here. What is inventory at the beginning? We have 575. At the end, what do we have?
Yeah, 6.
Five.
Look at it. Inventory at the beginning. We have 575. At the end, what happened? Let's write short notes on current asset. Increase in current asset. Yeah, let's write, please. Take a pen and write a short note on current asset and liability. Increase in current assets. Any increase in current assets will lead to cash outflow. Will lead to cash outflow. Why decrease? Why decrease in current assets? Why decrease in current assets? Why decrease in current assets will lead to cash inflow? Look at this one, inventory at the beginning is 575. At the end, 685. They have gone to the market to buy more. That is why the inventory is increasing. If you go to the market, what will happen? Cash will go. We are going to pay for the inventory we are buying because our inventory has increased in value. We have bought more. But if it is liability, increase in liability is a cash inflow. Increase in liability is a cash inflow, while decrease in liability is a cash outflow. Get the logic. Because more liability, more money. Increase in liability, cash inflow, while decrease in liability, cash outflow. Good. Yeah. I will now interpret. The bigger one will come first. 685 minus 575. What does it give us? Yeah. What does it give us? Subtract from a place.
110.
Yes. You can talk, please. Talk. 110. Thank you. I've just come here. But it's an inflow, outflow, because increase. It's an outflow. Then we go to the next one. What is the next one? Trade receivable. At the beginning, what is my trade receivable? 420. At the end, 515 minus 420. Increase in liability, cash outflow. Outflow of how much now? Yeah. Outflow of how much? 515 minus 420. If you really want to give me figure.
95.
95. Outflow. The cash are cash equivalent. That's what we know whether we are correct at the end of the question. Cash at the beginning, we have to the cash we are bringing on to give us cash at the end. Then I'll go to the liability. No current liability. No current liability. Trade payable. What is the trade payable at the beginning? Let's check. Trade payable at the beginning.
350.
At the end is 480. 480 minus 350. Don't forget increase in liability. Increase in liability. More liability, more money. Increase in liability. What does it give us?
130.
130?
Yes.
Thank you, my sister. 130. Then next, accrued expenses. But there's a note on accrued expenses. There's a note. Let's go to notes on accrued expenses. Somebody should read the note on accrued expenses for us.
Roman figure 7.
What happened?
The accrued expenses balance includes interest payable of 87,000 as at 31st March 2004 and 12,000 as at 31st March 2005.
Can you see? Accrued expenses includes interest payable. Don't forget, in 2004, I will adjust the accrued expenses because interest payable is not accrued expenses. 2004, 2005. The one in SOFP, in the SOFP, in the SOFP figure, we have 172 here. We have 107. But they put interest payable inside accrued expenses. Another name for accrued expenses is other payable. They don't call it accrued expenses, they say other payable. I will now remove the interest payable on it, which was given additional information. Additional information was saying interest payable. They used to play this part. You need to be careful. 87 and 12. So this will now give me the original accrued expenses. They put what does not belong. 172 minus 87. 172 minus 87.
85.
85. This one will give me 95. This is what I will now interpret. I will now say, okay, 95 minus 85, which is 10. It's an inflow. With this, yeah, let's add. Let's add them. What does it give us? Are you adding? Are you adding for me? 255 plus 720 plus 80. Cash generated from operation. 1012. One zero one two. I will now calculate task. Task is the last item under operating. I will now say task. I will look at the question, does it have different tasks? Don't forget when we are doing different tasks. Addition of current and different tasks. Task is the last item under operating. Say 5. Calculation of tasks. So this is the template for operating to follow. 1. Add back non-cash items, information on disposal, wrong classification, then change in working capital, then the last one is task. So let me calculate the task. Go to the question. Does it have Viva task? Task page. Go to the question. Does it have Viva task? Where am I going to see Viva task? No current assets. not current assets. Good job. Does he have different tasks? Yeah, let's calculate. We'll now say at the beginning, what is the different task at the beginning? In the non-current liability, at the beginning is 200 plus current task at the beginning, income tax at the beginning, 190. 200 plus 190, that will give me 390. I'm now going to add the tax in the P or L. What is the tax in the P or L? Go to the profit or loss, 140. 530. At the end, what did they report? What is the different tax at the end? 250 plus 80 income tax in the current liability. 250 plus 80, that is 330. Tax paid. Balancing figure. BF. 530 minus 330, 200. We just go to this. $200. This will now give me net cash flow from operating activities. That's it. That is it. Then, don't forget we need direct method, investing activities. Any question for me before we proceed? Any question for me before we proceed? Any question?
Please, can you go back on the tax paid?
Okay, ma'am. At the beginning, what is the different task? $200,
200. Okay.
Investing activities. Don't forget, investing is buy and sell, nothing more. Buy and sell. I'll pick them after the other. PPE, cash proceeds from sales of PPE. Cash proceeds from sales of PPE. We don't calculate that. is in additional information. Cash proceed, 98. That is how much he said the PPE. Does he buy PPE? That is the only calculation. Buy and sell is investing. Investing is acquisition and disposal of non-current asset. Buy and sell. Let me calculate PPE here. At the beginning, what is the PPE at the beginning? Go and check in the question. What is the PPE at the beginning? We have 4.8. Depreciation will reduce my assets. 720. We dispose. Disposal that net book value. What is the net book value of the asset disposed? 75. Do we revalue? Revaluation. I can only look for in 3 places. Whether they revalue. 1, in additional information, they tell me they revalue. It's either they revalue up or they revalue down. If you go to additional information, 3, no current tangible assets include property, which shall revalue up by 125. I will check additional information. 1, 2. I will check the equity side in a statement of financial position where you have share capital, share premium, revaluation surplus. At the beginning was 300, at the end is 425, 125 revaluation. The top place to check POL. Oh, it was not in the POL. It must be reported in one of those 3 places. Either one of those 3 places. One is enough for me. I'll just come here. Valuation surplus. What is the next thing? Do they acquire asset on lease? Lease to NAS, which is not in this question. We are still coming there. I will sum everything together. These are the things that used to be there. I will now sum everything together, compare it to what is PPE at the end. Yeah. Can somebody help me sum it and give me the figure? Then PPE at the end is what? 4.5. What is the figure?
130.
4.
4,130. 4,130.
130. I will now say addition. 4.5 minus 130. What does it give me?
$370.
Don't forget we are buying. It will increase my assets, but it's a purchase. I will just come to my question, my solution. Purchase of PPE. Purchase. I will go to the next one. It's only two things he reported under non-current asset. Non-current asset is buy and sell. What did they report again? If I go to the question, they reported development expenditure. Do they sell development expenditure? We don't calculate selling. It's waiting for me in additional information. More information regarding the sell development expenditure. Do they buy development expenditure? That is the next thing. I've just come here. At the beginning is what? Development expenditure at the beginning is what?
400.
Amortization. How much do we amortize? 80 was amortized. At the end, what did they report? At the end, they report 370. Addition. That is it. That is all. Investing is buy and sell. It's buy and sell. Somebody should give me the figure.
322.
3. What do you call the figure?
Minus 322.
And next is financing. Don't forget, financing activities is just 6 items. 6 items. Financing is just 6 items. Share capital. What is the share capital at the beginning? 19 at the end 26. The issue shares to the public 26 minus 19. Two six minus 19.
700.
700. We need to clean this. Did they issue it at a premium? They issue it at a premium. What is the share premium at the beginning?
400.
100.
At the end is what?
750.
750.
It was issued at a premium. Don't forget that it's only 6 items. Financing activities is just 6 items, which are share capital, share premium, dividend pay, borrowing, finance costs, and the lease payments. Don't forget, no question can carry all the six. No question can carry all the six. So rare occasion, we know that we have. So let's go back. Sorry for the delay. Good. So now say share premium. At the beginning, what is the share premium at the beginning?
400.
At the end, you go
750.
out of the 6 I've done, 750 minus 400, 350 inflow. Out of the 6 I've done to remain for dividend pay, they pay dividend. I will go to additional information to see whether there is information related to dividend. Then information on dividend pay.
100,000.
Dividend pay is 100,000. In case it is not given, don't assume it is not paid. See the calculation of dividend paid. In case you are not given, what is the retained earning at the beginning? Go to the question, what is the retained earning at the beginning?
At the beginning, 1415.
One what?
1415.
One for one. One for one five.
1415.
Add profit for the year. Let's add profit for the year. What is the profit for the year? Which is 115? 115. 0, 3, 5. I will now less retained earning at the end. What is the retained earning at the end? Let's check. 1 4.
430.
We must give you the 100. So in case you are not giving, this is how to calculate dividend pay. Say dividend pay. I'll go to the non-current liability, the loan. In the non-current, we have 10% loan notes. At the beginning was 1,000. Oh, he has paid. At the end was nothing. 1,000 has been paid on the loan. He has the loan as at last year, but now no more loan. Out of the 6, we have done 4, remain 2. There is no finance lease. Oh, interest payable, the finance cost. Don't forget, I will adjust for it. The finance cost. Interest payable. At the beginning, the one they put in accrued expenses, I will adjust for it. 87. I will add POL, which is 45. 87 plus 45. 87 plus 45.
132.
132. At the end, $12 paid 120. So I've got my finance cost. Interest payable, which is the same thing as what? That is the end. No lease. No lease payment. It's only 6 items. I will sum it up. What does it give us? $700 plus 350 minus 100 minus 1,000 minus 120. Net cash flow. One. That is it. I will now sum all the nets. I will sum all the nets. I will sum all the net 170. All the net of operating, net of investing, 8112, 8112 minus 322 minus 170. Do not give me 320 positive. When it is 320 positive, or not so, is positive. Increase in cash and cash equivalents. 320. I'll go and check what is the cash and cash equivalent at the beginning. Cash at the beginning. Our cash at the beginning, other current assets, 232, and that's okay. Cash and cash equivalents at the beginning, which is 232 must equals to cash and cash equivalents at the end. 2, 5, 552. That is it. That is it. That is it. Any question? Any question? Any question for me? In the absence of no question, see you next week. Please practice what we do so that we can have solve more than one question next week.